Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. And so just a quick reminder, I'm here in a Market Chameleon and I'm using it to find interesting trades, and then I go to a brokerage account and I show how to put on those trades. All this is being done as an educational exercise. These are not actual trade recommendations. It's meant to be a teaching, educational experience. All right, so that being said, we're looking at unusual options volumes here in Market Chameleon. And you can see a lot of the stuff that's been in the news lately at the top here: GameStop, AMC, Nokia, some of the stuff that's been seeing a lot of the WSB Reddit activity. Ford here had earnings. So a few different things here at the top, some familiar names. Now here's XLF, which is the Financial Select so the S&P 500 financial sector stocks, which were kind of left behind in 2020, with obviously with the pandemic and everything, financial, everything got hit, but financial stocks never really recovered. But this year they've been moving up quite a bit more, and you can see this is pretty bullish, about 64% calls compared to 36% puts. Again, tends to be bullish signal when more people are buying calls. Almost twice the volume. So let's take a look and see possibly what's going on there. And so I sort the trades, and a lot of bigger trades. Sometimes in indexes you'll see a lot more sort of fund institutional activity, and you can see a lot of big trades coming across here. And this one's interesting. It's a 3-leg trade at 25,000 lots per leg, which is obviously quite big. And looking at it, this is definitely more of an institutional sort of trade, although it's often done for for individual traders or high net wealth traders or something like that. But this looks like a collar, and a collar, but with a call spread instead of just a straight call. So it looks like someone sold a call spread to generate a credit, and they're using that to finance a put. So this will give the stock a little bit of room on the upside to make money, but protects it on the downside. It's done for a small credit, but that's probably just maybe enough to cover the costs of doing the trade. So kind of an interesting thing. Now, if usually you hold the stock when you're doing something like this, and this does pay a 2% dividend. So there is a reason to potentially hold this, to have financial sector exposure with a little bit of upside potential and a something of a dividend, while also protecting the downside. So looking at that here, you can see over the last month or so, it has been in this range of 29 to 32, something like that. So so this is protecting through March. So it looks like maybe it's protecting for this, expecting this sort of activity to continue, while also protecting in case there's some kind of event that causes a sell-off. So what that looks like here, we go to March, and we get, so you can see where all this volume occurred here. I mean, a fair amount of open interest in these, but this looks to me like an opening trade, just because it looked like buying a put, selling a call spread, which is the typical situation that you would use when opening a collar. So it did not look like a closing trade, but it could have been. Could have been a short put to finance a call spread as well, that is being closed. But that's not my guess. Just generally speaking, you see the collars more often, but you could see quite a bit of volume. It would simply be buying this put here, and then selling this call, buying that call for protection. So you can make basically 35 cents, or at least when the trade was done, this was about 35 cents. So that's a credit, and this cost about 30 cents, which was a debit. So there's 5 cents left over as a credit. Again, just enough to potentially cover the cost of the trade done at that size. Probably something like that. And then, so this is essentially zero cost. If it goes down below 28, it's protected. You can't make money beyond 32 by owning the stock, but you can make money up from about 30 to 32 plus that 2% dividend. So interesting trade. Be able to watch and see what happens with financials, but this is kind of suggesting a neutral position in financials with the potential for a sell-off. So now, I don't recommend collars in my service, Option Flow Trader Pro, but I do call and put trades. So if you're looking for actual recommendations, that's a place to go. you can check out the link on this page for that product.